What's going on, everyone? Back again. And I wanted to do this video to kind of have a chat to you guys about what's kind of currently going on in the crypto market space. Because as you can see, or as you're most likely aware, especially if you've been following the graphs lately, there is a lot of red on the market at the moment. And some people are kind of have got a lot of fear about what's going to happen with the market overall and where things are going. And there's a lot of panic because I feel that people aren't approaching crypto or investing in the correct way. So I want to kind of chat to you guys about today about crypto investing, crypto trading, speculation, and a couple of tools and tactics you might need to know in relation to those moving forward so that you can actually become more successful and use this as a potential wealth generation tool for yourself over time. So as you know, guys, my name is David from Millionaire Incorporated, and I like to go through topics of personal finance, wealth creation, personal self-development, and obviously crypto. Now, if you're new to the channel, don't forget to smash that subscribe button and join, because I do put out a bit of content about this quite regularly. This is a off-the-cuff kind of piece. This is not something I've actually scheduled or put much time into research. It's just my thoughts on what's going on in the overall marketplace. And I feel like I need to address this because I feel a lot of people are kind of panicking and there is a lot of fear at the moment. As well as that, don't forget, drop a like on this video if you do like this kind of content. It would actually mean a lot to me if you do. It helps me with the algorithm, helps me kind of ranking up. As well as that, watch the entire video all the way through, or watch at least a fair chunk of this. So as well, guys, this is not financial advice. This is just educational and just kind of perspective and my own perspective of what's going on. As I said, I feel like there is a lot of fear in the market. There is a fair bit of FUD going on around the market. This is not hopium. This is not FUD. This is just my views on what is going on and how you can kind of approach everything which is going on. So let's take a quick scroll down here and have a look at a few things. So the current market cap of the crypto space is currently sitting at 1.35 trillion. So almost at 50% of what it was about a month ago when it reached the market highs in May. And I'll get to that in a second. But as you can see, scrolling down here, let's go over this way a bit more. You can see a lot of red, and obviously the chart's going down. Tethered is, just ignore that one. That's just a kind of stable coin, so that doesn't really move at all. That's just pegged to the US dollar, and it goes through printing, or it goes through its own kind of cycles. So I'm not going to get into that. Yeah, so got the 24-hour change, 7-day change, market cap currently. What it's done for the last 7 days as a chart, and what it's done over the last 90 days and year to date. Now, like I said, a lot of fear at the moment is because people probably got into the markets quite late when it was near its all-time highs. And as a result, it has come down significantly from that. In the last 90 days, Bitcoin's moved 40% down. Ethereum is still actually up. And a lot of these other projects, as you can see as I scroll down, are kind of still up, like over the longer time frames. But if you kind of look into the small time frame, the last 24 hours, everything is red. Last week, nearly everything is red as well. Only a couple kind of projects which are in the green. Shiba, don't know. I'm going to talk to you about that one. But yeah, as you can see, like I said, overall everything is quite red. But if you look at the last or the year to date, you can actually see a lot of the projects are up significantly. So, and this is why I want to kind of chat to you guys about this, because short term, things move quite quickly. And if you're not investing or getting into it at the right time, you can be sitting in a red position for some time without actually realizing any gains. Or if you invested early and you had caught that massive run up, but you never kind of got out and you're still holding your tokens, you might have a loss, or won't have as much in your bag as compared to to it was before. But I want to show you another chart as well and what's actually happening. So this is the global cryptocurrency charts, total cryptocurrency market cap. So I've gone for a 1 year kind of time frame. Now, as we said, in May, it got to about 2.5 trillion, so just under that 2.6 trillion. So we're just sitting just um, above 50% loss, or less. We've lost less than 50% of the market cap, and we're currently sitting at that 1.36. But if you can see, a year ago, we were actually sitting at about 257 billion. So even to its current point right now, it's still 5x on what it is overall. That's the 5x on the entire crypto market space itself. So that means there's a lot of money now floating into the market space. So it has had a significant run up. And if we look at year to date, we were still sitting at, let's see, $773 billion, and currently kind of sitting at 1.36. So almost 100% higher than what it was at the start of the year. So the market is still up. Long term, everyone is still saying it's quite bullish because of that, even though we are coming down. And like I said, a lot of people, I think, do have fear or are concerned about their investments or positions because they probably got into the market around this area here, or even just kind of around here, where it was kind of potentially overbought because it had run up almost 10x since a year ago. Like I said, that is huge. You don't really get that kind of run up in an overall market like this. Like if you look at the S&P 500 or the Nasdaq, the Dow, in the past year, it has had some significant gains, but even that is due to come down. And there is speculation that it's going to crash a little bit. So this is what I want to kind of talk to you about, because there are strategies out there that you can actually kind of approach the market or times like this, so you're more confident with what you're actually doing, and you can actually create some long-term generational wealth for yourself. So let's jump over to some slides quickly, which I've created. So we all want to be kind of successful overall in our lives, wealth-wise, personal, health, everything. And when it comes to any kind of success, it all depends on your mindset, your perspective of how things grow, and your persistence and patience with everything overall. Now, with crypto, has never been more truer. Crypto is not a get rich quick scheme, although a lot of people are treating it like that, because you do get these massive pumps and massive run ups on a lot of shit coins, as well as quite a lot of decent coins. And this gives you a false sense of security that you can make a lot of money quite quickly. And if you're not careful, you can get caught up in the hype of it all and lose a significant portion of your money, especially if it is in a project which is going nowhere. Now, we have all gone through that, myself included. I have invested in certain coins speculatively just because it seemed like there was a lot of hype. I had some friends make a lot of money in it recently. Like, all right, well, it's still in the early days. I want to jump in on this so I can actually hopefully capture some of these gains. But that is not the best way to approach it. So one of the things I tell people to kind of think about initially is establish whether you're an investor, trader, or speculator. And each three of these kind of areas has its own risk, reward, and time frames relating to it. So it kind of all based on your outlook on the market and the tech and what your personal goals are. Now you can be all three, and I'm just going to dive into these a little bit kind of more right now. So if you're an investor, you do have technically a longer term approach to markets or growing your wealth. You don't necessarily want to make it in the next 90 days kind of thing. And that's where I think a lot of people aren't at the moment in the market themselves. They tend to kind of think, right, I'm going to chuck my money into Shibcoin because it's gone up 13,000% in the last week, and I'm going to join that rally and it's going to go to the moon. I'm going to make $1 million. Now, that's pure speculation, and there's nothing wrong with it if you get in early and the right coin and it gets the right kind of pump. But I wouldn't suggest doing what a lot of people have done, where they literally piled all their money into it. And as a result, it's now coming back off its highs and lost a significant portion of its position, and you've lost a lot of your money overall. And like I said, that's where I think a lot of people are getting caught out, and that's what's driving me a lot of fear. And I am part of a lot of groups which I do see this, and I wouldn't say it's amusing, but you can tell people who aren't seasoned traders or investors, are purely speculative and just want to make that quick buck. Traders, like I said, shorter term time frame, they don't necessarily go for 100, 200% returns. Although in the crypto market space, you can actually get that 100, 200% return in a very, very short time frame because the nature of crypto that it actually moves quite quickly. Like I said, you can actually be all three. It all depends on how you want to set up your portfolio overall. So you can actually have, say, a significant portion of your money invested in certain projects which you do plan to hold for the long term. I'm talking about years. You can be a trader with a certain percentage of your actual total capital as well, trying to catch those kind of slightly more speculative plays. Sorry about that. Or purely speculation, where I say only use very, very minimal amount of your money in that kind of scenario, because that won't necessarily give you the greatest wealth, but it can actually significantly increase your wealth if you catch it at the right time and it gets a significant pump. So if you are an investor, this is actually a great time to dollar cost average into some solid projects, because, and this can be kind of determined by chart analysis or having an investment schedule in those projects. Now, I actually go through what I actually look for in projects in one of my last videos, so I'll actually leave a link to that below. So definitely check that out if you are interested, because it will give you a bit more of an insight into how to choose better quality projects so you can actually put your money into them and have a greater chance of success over time. So you have to actually, as well as that, understand what makes that project move and become more favorable. The crypto market is very sentiment driven and very hype driven. So the more hype surrounding the crypto market, kind of like it was 2-3 months ago, the more money pumping into the market, which will drive everything up, and you will be more successful. But that's, like I said, that's a very short term kind of mindset to have when it comes to crypto and the projects. If you actually, like I said, dollar cost average into decent projects, you will kind of have a longer term success rate overall. Say people like, I think Cryptos Are Us, George, we're all George if you know the channel. He actually talks about dollar cost averaging into projects like Bitcoin, Ethereum, Cardano, Polkadot, Solana. Like I said, top quality projects which are building smart contract ecosystems which do have a long term outlook, and the overall trend for crypto is up because the tech is here to stay. And if you're into it longer term, you can actually catch wind of all that. And there is many dynamics surrounding what actually drives the prices of all these things. And you have to understand the tokenomics of all that. So the Coin Bureau has actually done a video on tokenomics, and it's actually really, really good. I'm not going to go into it because I will do it no justice. I'll literally butcher it. So jump over to their channel as well. Listen to that video. It's actually really, really good. I highly suggest listening to it. Okay. Now, if you are a trader, you will need a decent understanding of chart analysis and what drives a chart or market and how charts actually move. So you're understanding like impulse moves and retracements, and overall kind of chart analysis, technical analysis as well. So you have to understand certain techniques and chart patterns such as Wyckoff, wedges, bull flags. I'm not a fan of candlestick analysis per se. I kind of do more so price action at zones, and I'll actually get into a bit of that in a second, so I can give you a bit more of an understanding of that. And Wyckoff is something which I'm actually quite new at looking at. So I'll quickly touch on Wyckoff right now for you, a little bit of what I understand about it. But do your own kind of research into the Wyckoff, because there is plenty of information out there. Like I said, I'm actually quite new to understanding Wyckoff. I've heard it around a couple of times now on the market, and it actually makes a lot of sense to me, because if you understand market moves already, you'll understand how, I guess, the market makers or the big smart money drives markets. And that's something to actually kind of remember as well at the moment, is that a lot of institutions are now coming on board with crypto because they want to offer their clients exposure to cryptocurrencies such as Bitcoin and Ethereum and some of like the larger tokens which are well established and doing quite well. So With that, they will have a lot more influence over the markets overall. So this Wyckoff chart patterns will kind of play out a lot more regularly, and I feel like it's going to actually slow the market down a lot more. You won't actually see these massive pumps or massive run-ups. It'll be like a more gradual thing over time. So the Wyckoff method is as the notion of a composite man, or the overall market as a whole, not as a whole, but the people who are kind of having the most influence on the market, and they're generally the smart money. So it kind of looks at what the smart money is doing overall and the overall price cycles. And there's typically four phases: accumulation, markup, distribution, and markdown. So it kind of talks about like accumulation when the market's at its bottom, where it kind of say start piling their money into the market, driving the price up, and then selling off in the distribution phase, so they can kind of cash out, but people are kind of still pumping their money into it. Then obviously the markdown as it kind of comes back down, and it just kind of goes through that cycle overall. Now, and each phase has its own characteristics. Obviously, I just kind of cut that off there a second ago, which I was so each case has its own characteristics which are present to that phase itself. But like I said, I'm not too familiar with it. I just started looking into it a couple of nights ago, and I'm doing this video just off the cuff. But let's jump over to the charts quickly itself now, and I'll actually show you some things with charting support, resistance, trend lines, and what I look for, and ways to give yourself better odds at identifying these areas which can give you a better understanding of the of price action and a better odds at being successful when it comes to either dollar cost averaging into the project itself, because these areas will give you a decent area to kind of buy into or sell off at, and even trading off. So let's jump to the charts. So I've pulled up a chart of the Ripple XRP here. I'll put it on the daily chart time frame for like the past, let's say, 9 months. So you can see kind of gone higher, lower, higher, and obviously just took off around here. So what I was talking about before about impulse and corrections is, I'm just going to quickly draw this with some arrows. So what the chart market usually does is has an impulse up, a correction down, impulse up, correction down, impulse up. And you'll see that this will kind of repeat itself over time. And there's another kind of theory called the Elliott wave, which goes through a cycle of three kind of legs up, and then two kind of legs down, and before restarting that cycle. And that's for an overall uptrend. Obviously, that's the proper uptrend. This is a retracement downtrend, and then it kind of repeats that cycle over time. But let's just delete all this because we don't really need that right now. So you're in an overall bull trend, you want to be looking for that to kind of happen. So you are kind of waiting for, if you've missed the buy opportunity, don't just kind of jump in and FOMO into it, because that's where a lot of people make a lot of mistakes. Like I said, people probably bought up here when they started FOMOing into the projects, and as a result, it's kind of come down significantly. Let's see from the top. Let's just go from about this 180 area down to where it is right now. So that's lost 60% of its value overall. So that's why people are hurting at the moment, because they haven't done any kind of analysis. They've just kind of FOMOed into it because they think, all right, everything's going to the moon. Yet, as I said, you can't necessarily go from 200 billion to 2.2 trillion in a span of a year and think it's going to keep going up. That's just ludicrous. It's ridiculous. Alex Becker is actually someone who I actually follow on Twitter and YouTube, and he actually explains this a bit better than I do as well. So definitely go over to him and check it out. So I'm going to draw in some support and resistance zones so you can actually see what I'm looking for. So I'm going to do some horizontal rays. I like drawing it with this. And you want looking for areas where prices actually struggle to kind of move above before actually breaking above and going higher. So one area is actually right around here, and I'll actually explain the area to you in just a second, and why I actually chose that area so to speak. So you can see prices kind of came up above, couldn't hold above it, came back down, came up, tested again, came back down, tested again, came up lower, a third time, multiple times before it finally moved up. And just in this area just here, I'm going to highlight this so it makes it a bit easier so you can actually see what I'm talking about. Just here, you can see a bit of a kind of accumulation as the price started kind of moving higher. Let's actually change that to like this here. Makes it look a bit neater. So you can see, came down, tested, bang, bang. It kind of started going this kind of wedge pattern. So price was being squeezed. And what you can do as a trader is actually wait for either one or two kind of things to happen. So you can wait for it to either break above this area, retest before moving higher, or break below, retest before moving lower. So you can see, sorry. So you can see over it actually did break above before moving higher. So that's what you want to kind of look for when charting things. You want to look for kind of patterns forming to give yourself better odds at being successful over time. This is something which does take a lot of kind of practice over years. I have been trading Forex for a long time. As you can see, these are my charts for Forex up here. These are my stock charts, and these are my crypto charts, which these are some projects I kind of watch. Yeah, so that's a resistance zone. And you can also see a area of kind of support around here where price came down to before moving back higher. So prices support is where price comes down to before moving higher. So it kind of tested it before moving up. And then once it actually broke through it, it kind of tested it again. It became resistance. So once price breaks above, it becomes that resistance area becomes support. And once price breaks below that area, it then becomes resistance. As you can see here. So now prices actually has been just floating between these two areas at the moment. So what I'm actually looking for is to see how price reacts around this area. But I'm going to try to tidy up this kind of resistance or now support zone a little bit more. And I switch from bars to line, and I look for an area where price is kind of tested a few times more cleanly. So it's actually around this area right here. And one thing with Forex, we always like to use even numbers. So I'm actually going to change that to 65, or let's see what 65 brings up. So pretty much bang on where we are right now. So you can actually see that, how it's kind of came down. And when we had that massive sell-off a couple of weeks ago, you can actually see it came right down into that area, touched it quite cleanly before moving higher. Now, a chart I actually shared more recently was actually this Bitcoin chart. Wait for it to load up. And you can see I had actually identified this area on the daily at the base where it actually kind of came down to, tested it, bounced above. This line here is actually from the weekly. So the higher the time frame, the better the area of support or resistance. I'm kind of watching a few areas here at the moment. So that's at the base of that one there, which I drew it into. So you can kind of see just there at 32,176. I'll actually look at this in a second. So you can see after it kind of came down a second time, and the low of that one was 31,111. So it's about $1,000 below, a couple hundred below where I was saying it was actually going to come down to. And you can see it's actually a decent level of support. So it's actually came down, tested, wasn't able to break through. Eventually it will break through before moving lower. Now, I don't want to kind of get into price predictions and things like that. I'm not interested in that. One area which they're saying is an area of support which might be interesting to look for is this area just here. As you can see, price came up, couldn't break above, and finally did break above. So if price actually does break below this area here, it will tank from 29,000 right all the way down to that 24,000. So something to kind of look at and keep an eye on over time. But that's some basic things when it comes to charting. So as you can see, I've got these other lines here. This is where it was a kind of a downward kind of creating a flag pattern kind of thing, a bearish flag, or you could probably say, or a bearish wedge. Price was kind of being squeezed lower. It actually broke above, so everything was actually thinking that it was going to continue higher. But this is actually typical Wyckoff right here. So it'd be interesting to see how this actually plays out and if it actually kind of bounces up and goes to the higher, because people are expecting it to move higher over time. So like I said, it might come lower down to this 29 area before moving higher again. You just got to kind of wait and see, and that's the nature of trading. So just keep an eye on that. A lot of information in this video, guys. Sorry for waffling on a little bit, but I wanted to get a lot of that off my chest to kind of help you guys so that you can actually become a bit more successful with trading and investing, or even speculating in the crypto market. So let me know what you guys think. Leave a comment down below. Let me know what data the projects you're looking at as well. Would love to hear from you. Don't forget, if you enjoyed this video, leave me a like, and don't forget to subscribe to the channel, and I'll catch you guys again on the next video. Cheers.